In this S&P 500 technical analysis, I will tell you that even when the S&P 500 is heavily bullish, then also why it can move only up to the 7,900 psychological mark and why there are chances for a fall back to the 7,500 range, and what does this conditional bearish means for the S&P 500. The first thing is why the S&P 500 is heavily bullish. This is because the S&P 500 has regained its long-term trend and the short-term trend absolute bullish, and the impact of the same can be seen here that S&P 500, rather than coming down, it moved up and made a new all-time high at 7,816.70 on 13th of August. However, you can clearly see the struggle here in the bull side. This is because the heavy bullish movement we have seen in the first week of August was because of the news that there may be a possible deal between the US and Iran, and because of which we have seen very heavy bullishness in the entire stock market, and also the earnings season is over and also there is no favorable data. This is why the only thing that is keeping the S&P 500 bullish is this bullish momentum that the S&P 500 and the stock market gained in the first week of August. However, the 7,900 will not be that easy because if you notice, the current all-time high is the 7,816 approx. But that's not important. The important point is that on 13th of August, after making an all-time high into the 7,800 range at 7,816, the S&P 500 closed at 7,799. And this was seen as rejection from the 7,800. Furthermore, the closing on Friday was at 7,785. This was also the rejection from the 7,800. However, this rejection is of no use because of the 7,707x level, which is very, very important for the S&P 500. And as long as the S&P 500 is trading above the 7,700x level, and as long as the S&P 500 is trading and holding above the 7,707x level, there will be no bearishness no matter what is happening, even if there are multiple rejections from the 7,800. And I've repeatedly mentioned this from Wednesday onwards to my community members that see 7,707x level is the key to the bearishness, and as long as S&P 500 is holding above this level, the rejection from the 7,800 will not work. Then why the 7,500 range? So if all of this is true and the S&P 500 is moving up but is struggling to move up and is still heavily bullish, then why the 7,500 range? This is because of the unfulfilled technical obligation to the previous all-time high that was 7,600.20.90 or the 7621, that was my calculated level. And once the 7,707x level support is gone, in that case S&P 500 will be, it will come under heavy pressure, and then the last support is the 7,700 psychological mark. Because losing 7,700 means that now there is very heavy probability for the 7,500 range to happen, and this will fulfill all of the pending obligations. Because if you notice on Tuesday when the S&P 500 was coming down, the low was 7,717, and that happened because the S&P 500 failed to move to the 7,707x level and lost the 7,705x level. That is why it was clear that S&P 500 will easily come down to the 7,702x level, but the heavy support is at the 7,700 psychological mark because of the presence of the moving average. This means that bearish side will be handled either at the 7,702x level or somewhere in between these two, in between the 7,700 psychological mark and this my level. Then what about the conditional bearish? Conditional bearish means that as of now the long-term trend and the short-term trend are absolute bullish. Okay, this means that whatever fall will be there in the stock market, in the S&P 500, this fall will be limited. This fall will not be heavy. Means from the current price, the S&P 500 can fall like 2% or around 2%. And only in the exceptional case around 2.7 or 2.8%. So what will be this, the exceptional case, and how long the heavy support levels will work in favor of the S&P 500? And what will be the next heavy resistance to the S&P 500, from where S&P 500 is like more than 90% chances that S&P 500 will fall and will come down, and then there will be chances for the 7,500 range. And what will be the conditions through which the S&P 500 can actually move towards the 7,900, or if there is any possibility for the 7,900 to happen. So all of these bullish, bearish conditions, movements, technicals, all of this I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of August 17th, means August 17th, which is Monday, to August 21st, that will be Friday. Now guys, let me tell you that how you can navigate through this, the S&P 500 technical analysis. So I have divided it into two parts. The first part is the technical part. In the technical part, I will cover the weekly chart and the daily chart, and I will tell you the overbought conditions and the saturation in the bull side, and how long the S&P 500 can sustain or the Dow Jones can sustain in this manner. Second part is the probable movement. Probable movement means what are the conditions for the bullish movement, bearish movement, what are the support and resistance levels, and what kind of movement we are expecting. Like first it will move up, then it will struggle at the resistance level, then it will come down, will find support and will move up again, or it will simply come down if it fails to sustain at the level. All of this in the probable movement section. So guys, first I'm going to start with the technical part. So guys, this is the technical part, and I have divided it into two parts, weekly chart and the daily chart. First, I will cover the weekly chart. Weekly chart means the long-term picture for a month, for a quarter, or for 6 months. Daily chart is the short-term picture for a week, for 2 days, 4 days, that's it. Okay. So first, the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Now, let's analyze this. The last weekly candle of the S&P 500, it is a very limited bullish candle or very small bullish candle. Okay, there is no defined shape of the candle, but because the closing of this candle is above the closing of the previous candle, means the open and the closing of the previous candle, this means that this candle, even though it is very small, it still has the bullish momentum. Okay, this candle is indicating an initial or intraday bullish movement on Monday. That's it. No gap up, no gap down, nothing like that. This is the chart of the Dow Jones, weekly chart of the Dow Jones. Okay, last weekly candle of the Dow Jones, it is a limited bearish candle. Okay, why the limited bearish candle? Because the open of the Dow Jones, open of this candle was above the closing of the previous candle, but only the closing is below the closing of the previous candle. That is why limited bearish candle. This candle is indicating an initial or intraday bearish movement on Monday. And if you look into the nature of the candle or the body of these two candles, then this clearly indicates and clearly confirms that the momentum the stock market got in the last week, that was because of this week, this heavy weekly candle. Otherwise, the market, the S&P 500, Dow Jones, these indices were not in the sustainable condition. Okay, definitely there was some manipulation. Without that, it was impossible to hold, okay, in this manner. But because of the bullish momentum that was generated through the candle, the S&P 500, Dow Jones and the indices have sustained. Okay, so now through the candle it is clear that in the stock market there is the struggle to sustain in the bull side. Okay, these candles clearly shows the struggle, and now we are expecting a counter movement in the S&P 500 and the Dow Jones. S&P 500 weekly chart is indicating an initial or intraday bullish movement on Monday, but the Dow Jones is indicating an initial or intraday bearish movement on Monday. This means that there will be struggle in the bull side when the stock market try to move up, and will remain highly susceptible to come down. Okay, because of this counter movement in the indices. Well, now let's analyze the technical indicators to see if there is any overbought condition or if there is any saturation that can force the stock market to come down. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now through the technicals, the S&P 500 is bullish through the Bollinger Bands, bullish through the moving averages, bullish through the Ichimoku cloud on the weekly chart, and also the S&P 500 is bullish through the MACD, bullish through the stochastic RSI on the weekly chart. And the S&P 500 has so far, it has not hit any saturation or any overbought condition. The last change that I've shown you is in the previous S&P 500 technical analysis. This was in the MACD, because MACD, it generally gives a linear movement for a long period of time, for 4 months, 6 months, and sometimes 1 year. Okay, but this time now what we are seeing here is that when there was a confirmed bearish crossover in the weekly in the MACD of the S&P 500 on the weekly chart, still through these the comments of the president and through the comments of the secretary Besant that there will be a deal in a day or two, again these comments were repeated again and again. Because of that, we have seen very heavy bullish movement, heavy gain, like 4.5% gain in just 1 week, and the technicals were forced, were compelled, were manipulated, okay, to change, right? Anyways, so this means that as per, okay, through all of these the technicals, the S&P 500 is 100% absolute bullish on the weekly chart and is in the long term bullish trend. Now let's analyze the Dow Jones, the technicals of the Dow Jones. So Dow Jones is also bullish through the moving averages, Bollinger Bands, and the Ichimoku cloud. And also the Dow Jones is bullish through the MACD and the stochastic RSI on the weekly chart. Okay. And the Dow Jones has now entered into the saturation and in the overbought condition. Any bullish movement in the next week, remember this is the weekly chart, okay, for the entire week. Bullish movement or the green candle in the next week means that the Dow Jones will then trade into the saturation and in the overbought condition, and this itself is sufficient to put the bearish pressure on the Dow Jones. However, the Dow Jones can still survive because of the S&P 500, because so far S&P 500 on the weekly chart has not hit the saturation and the overbought condition on the weekly chart. But if there comes any more bullish movement in the S&P 500 in the next week, okay, any bullish movement, then the S&P 500 will hit the overbought and the saturation on the weekly chart. In this manner, the entire stock market will come into the overbought and the saturation in this condition, and by default then technically there will be the pressure. And if there comes no supportive comments from the president or from just like recently what we have seen, if there comes no supportive news, if there comes no supportive earning, well earning season is over. If there comes no supportive data is also not there in the next week. Okay, this means that only and only through the manipulation, okay, the stock market can be saved, or the stock market can survive. Otherwise it is not possible. Yes, the bullish momentum that the stock market has gained, it will help the S&P 500 and the Dow Jones to sustain, but it cannot cancel the bearish side movement, and this bullish momentum is not enough to keep the S&P 500 and Dow Jones moving up and up. This bullish momentum has only the limited potential to hold the S&P 500 at the current level, okay, but still if some conditions are not met, and if there is any problem, and if the S&P 500 and the Dow Jones, they fail to hold and to sustain at the critical support levels, in that case there will be the fall, then this bullish momentum will not be of much use. But now this picture will be more clear on through the daily charts, because through the daily charts are the short-term charts. Through the daily charts, we will get to know how soon the S&P 500 can come into the bearish condition, and that will then override the bullish momentum. So let's now move on to the daily charts. So guys, we are here, and this is the daily chart. Daily chart means one candle represents 1 day, not 1 week or 1 hour. One candle means 1 day. Now let's analyze this. The last daily candle of the S&P 500. Well, it's a normal bearish candle. Okay, not a heavy bearish candle, and also there is no defined shape of the candle. So what does this mean? This means that there will be an initial or intraday bearish movement on Monday. Okay, however, there is a catch. Okay, the catch is that the closing of the S&P 500 was at 7,785.76 on Friday, on 14th of August. And that closing was above the 7,707x level. Okay, so even though there was a rejection from the 7,800, but the closing was still above the 7,707x level. This is why this initial or intraday bearish movement, this is not expected to be heavy. Rather, there are chances that the S&P 500 can even get the bullish movement and some bullish momentum because of this particular closing. So in short, This the initial or intraday bearish movement on Monday in the S&P 500. This has limited momentum, and whatever the fall will be there, that fall will be limited, but will remain conditional. Conditional to what? The 7,707x level. Okay. Now, this is the last daily candle of the Dow Jones. Again, a very thin, very small, very dull bearish candle. Okay, just like the S&P 500. This candle is also indicating an initial or intraday bearish movement on Monday, but this candle does not have any kind of support that was there in the S&P 500. The S&P 500 closed above the 7,707x level. That is the only bullish support. Okay, but this support is not there in the Dow Jones. Rather, Dow Jones is in the bearish breakout condition, and if the Dow Jones fails to recover on Monday and Tuesday, in that case we can see the counter movement to this, the heavy fall in the entire stock market. Anyways, that picture will be more clear through the technicals. But guys, before I discuss the technicals, so far if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And also please hit the hype button on YouTube to show your support. So let's analyze the technicals. So S&P 500 is just like on the weekly chart. S&P 500 is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the daily chart. And also the S&P 500 is bullish through the MACD on the daily chart, and is also bullish through the stochastic RSI on the daily chart. S&P 500 is trading just around the saturation and the overbought condition. This means that any more bullish movement and or two consecutive green candles in the S&P 500 on the daily chart, okay, will force the S&P 500 to hit the saturation and the overbought condition. This means that the stock market still has the time of 2 days, Monday and Tuesday. And if the stock market, if the S&P 500, Dow Jones and these indices, if they want to move up, in that case they are allowed to do so until and unless there comes the saturation and the overbought conditions on the daily chart also. Because when there comes this condition, when the S&P 500 and the Dow Jones, they hit the saturation and the overbought on the daily chart, and also at the same time it has hit the overbought and the saturation on the weekly chart, then this is happening on these two charts, daily and the weekly chart, then by default there will be the pressure, and by default there will be a good fall to come out of this, the pressure. Okay. However, as of now, the S&P 500 is 100% absolute bullish on the daily chart, just like it was on the weekly chart. So this means that the long term and the short term trend of the S&P 500 is bullish. Now the Dow Jones. Dow Jones is still trading bullish through the Bollinger Bands, Ichimoku cloud and the moving averages on the daily chart, and the Dow Jones is bullish through the MACD, but the Dow Jones is bearish through the stochastic RSI on the daily chart. No overbought, no saturation, and no oversold. Okay, so Dow Jones is, see, this is the MACD of the Dow Jones. Now again, see, just like what I have mentioned earlier, this is the daily chart. Okay, on the daily chart you will see again, once again, linear movement, very clear, very good movement. Okay, linear movement for long time, like for a week, for 2 weeks, for a month, okay, for 2 months. The MACD of the MACD of the Dow Jones, okay, you can clearly see it is giving very linear movement. Now it is coming into this condition wherein we can expect a bearish crossover in the MACD of the Dow Jones, right? Stochastic RSI is already bearish. So if there comes fall on Monday and Tuesday and Wednesday, I think it will take 2 or 3 days. If the fall is normal, like 0.5% in a day, 0.6% in a day, but if the fall is like 1.5% in a day, then within 1 day or like 2 days, the MACD of the Dow Jones will get okay, there will be a confirmed bearish crossover. And when the MACD is bearish, stochastic RSI is bearish, then by default there will be the bearish momentum. Okay, so well, anyways, in this manner the Dow Jones will be seen or will be considered as 80% bullish on the weekly chart. The only bearish factor is the stochastic RSI, that's it. Okay, but this will not change the picture as such, because both of the S&P 500 and Dow Jones, they are 100% bullish on the weekly and the daily chart. Okay, and also both of these indices means the S&P 500 is 100% bullish on the daily chart. Only the Dow Jones is 80% bullish on the daily chart. Overall, long-term, short-term trend is bullish or absolute bullish. And now the Monday and Tuesday will tell us whether there will be the chances for a new all-time high, okay, or if the new all-time high will be sustainable, or there will be simply the bearish movement and then the fall to fulfill its technical obligation, or a fall that will be limited and will then open the bullish opportunity. So all of that now I'm going to discuss in the next part. The next section is the probable movement section. So now let's move on to the next section. But guys, before I discuss the probable movement, I have this important information to share with you, that I give these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday, and also up to 100 opportunities in the premium stocks and the ETFs of the US stock market. And also I give the S&P 500 midweek update. It's a video technical analysis generally given every Wednesday, and the movement with the precise levels and everything is discussed here. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and also for the Dow Jones, Nasdaq, and also the opportunities in the premium stocks and the mid-week update video technical analysis. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the probable movement, means what is expected to happen in the S&P 500 in the coming week, the week of August 17th. So first thing first, next week there is like no earnings. Only the retailers like Home Depot and Walmart, they will post the earnings. But the impact of those earnings will be on the Dow Jones, and that will not be much. Okay, that is not expected. The impact like heavy bullish movement or the heavy fall, okay, that is not expected because of those earnings. The earnings season for the S&P 500 is now completely over, because the primes Apple, Microsoft, Meta, Amazon, okay, they have already posted the earnings. That means they have reported the earnings. Okay, the only factor in the next week is the Wednesday, when the FOMC minutes of the meetings will be released at 2 p.m. Eastern time. Okay, this is the only factor that will logically influence the movement of the stock market. Otherwise, nothing. Okay, yes, the Middle East will still remain in the situation, will still remain in the picture. Okay, means any comments from the president, like favorable comments from the president, okay, or from Secretary Bessent or from someone, okay, will trigger more bullish movement, just like what we have seen here. Then it doesn't matter whether there will be a deal or not, but regular comments, continuous comments will simply help the stock market to move up. Okay, and if there comes a deal like ceasefire or so, then definitely there will be the bullish condition, and the failure of these means the stock market will struggle in the bull side and will remain highly susceptible for a fall. So all of these are these external factors. So now let's discuss the probable movement, means through the numbers, levels, technicals. Okay, so now what we know is that S&P 500, the bull side, first of all the 7,800, then comes the 7,707x level. Okay, these two are very important. Why these two are very important? First of all, the S&P 500 made an all-time high at 7,816.70 on 13th of August. Okay, but the closing was at 7,799. Because the closing was below 7,800, this is why we knew that on Friday there will be struggle in the bull side, and S&P 500 will remain under pressure, will trade under pressure. And the same I mentioned in the pre-market analysis on Friday, on 14th of August, to my Patreon community members. And now the second consecutive closing on 14th of August, Friday, okay, it is again below the 7,800 at 7,785.76. Means there are two consecutive rejections from the 7,800. This itself is sufficient to trigger the bearishness or the fall. Why? See, this is what actually happens naturally. Naturally, whenever there is a psychological mark, like for example, 4,000, 5,000, 6,000, 7,000, 8,000. Okay, and when there is extreme bullishness, and then in that case of the extreme bullishness, these are marks like 5100, 5200, 7400, 7500. Then these psychological marks of low level, they also act as the strong resistance, right? So now this is why I'm saying the 7800 is the bearish factor for the S&P 500. This means that if on Monday, if the S&P 500 opens below 7800, okay, or if it opens above the 7800 but then starts to give hourly closings below the 7800, okay, then all of these are the bearish factors, right? But still the situation will remain under control and the S&P 500 will remain heavily bullish. Why? Because of the 7707X level. Because as long as the S&P 500 is holding, sustaining, closing, all hourly closings, 4 hourly closing, daily closings are above the 7707X level, the S&P 500 will remain heavily bullish no matter what. In that case, the rejection from the 7800 will not be considered, or the impact of this rejection will be little or limited. Little or limited means the S&P 500, whenever it will try to move up, it will struggle. That's it. Okay, nothing much. But in order to trade bullish, to remain heavily bullish, and to be in a condition to make a new all-time high, the S&P 500 is required to recover, to regain the 7800, and then all hourly closings, continuous hourly closings must be above the 7800. Okay, then it will move up, but then immediate resistance is at the 7801X level. So when on Thursday, when S&P 500, okay, it moved up and there was heavy manipulation on Thursday, when it moved up, entered into the 7800, then also we knew that S&P 500 is going to struggle and most likely to restrict to the 7801X. Okay, this was the level. And even if the S&P 500 somehow breaches this, the 7801X, then also it will fall back to or below, not the 7801X, but to or below 7800 psychological mark. And see, exactly the same I have mentioned here, that S&P 500 intraday is highly susceptible to come down to test the 7800 psychological mark, and the fall will happen back to the 7707X when the S&P 500 loses the 7800 on the hourly closing basis, and it did. But in this case, when the S&P 500 gains the 7800, there are continuous hourly closings above the 7800, then there will be struggle at the 7801X level. And if through any reasons known or unknown, if the S&P 500 still try to move up, okay, then the next heavy resistance is the 7803X level. Okay, now there is an important thing here. In between 7801X and 7803X, in the 7800 to X, somewhere around 7800 to 6 or like 24. So exact number I will mention in the pre-market analysis on Monday. Okay, so the S&P 500, because this is my calculated, see, the method that I use to calculate the opportunities. So when I say the opportunities, I mean these opportunities. Okay, like, so I give 100 opportunities. So I calculate the sell, the short, this the price, the buy or the long price. Okay, then standard, okay, profit booking or maximum trailing stop loss and the stop loss. Okay, so these opportunities, so I use the method, okay, to calculate these opportunities. Now that method has given this number 7800, 24, 26 or 27. Okay, this particular number, and then immediately after this there comes a level, calculated level at 783X. This means that S&P 500 is going to face heavy resistance, okay, as soon as it sustains or it try to move up above the 7800, right? So there will be the 7801X level. Then there will be the 7800, 24, 26 or 27. Okay, then there comes a 7803X. So back to back, there is heavy resistance. There is very heavy resistance. Okay, this means S&P 500 is highly susceptible for a fall than to move up. So first it will come down. Okay, and see this, if the S&P 500 is coming down continuously from here, it is not sustaining or is not trading above the 7800. Okay, and whenever it try to move up again, so then again it will have to fulfill these the conditions. So irrespective of anything, bullish or bearish movement, whenever S&P 500 moves up, okay, hits the 7801x, this is the 7800, this number in the 7800 2x range, and then the level in the 7800 3x. Okay, it will struggle heavily, the S&P 500 will struggle heavily, and it will be highly susceptible for a fall. That fall will be again to what? Again back to the 7707x, because then 7800, it will not be in a condition to hold for long. It can hold for 1 hour, 2 hours, but not for long. Then eventually the 7707x level is what will actually handle the fall. So if this is the condition, then why I have mentioned, or why I have said that that there are chances for the 7900 to happen. Okay, see, there are chances for the 7900, but this method will be followed no matter what. So what can happen here is that on Monday and Tuesday, S&P 500 can move up, struggle, fail, come down, support. Okay, then Tuesday or Wednesday it moves up, then Thursday again moves up, then Friday again it moves up. Okay, and then in the meantime, okay, there also comes some news or some comments from the president, or some news from the Middle East or so. Okay, and then it moves up. So then that will be the bullish condition. This will then push the S&P 500 beyond the immediate resistances. Okay, 7801x, 2x range, and the 3x. Okay, then S&P 500 will be in a condition to move up and to go near to the 7900. Why I am saying the near to the 7900, and why I am not saying the 7900 range? The reason is that there is the heavy resistance in the 7800 7x/8x. This is the zone. Okay, see, 7707x, this is the level, just one number, single number. But the 7800 7x/8x, it is a big zone. It is a zone. Okay, so the S&P 500 is highly likely to fall. Okay, there are like more than 95% chances, 96-97% chances that S&P 500 will fall from here. Okay, this also includes a condition. Let's say, okay, if there comes very heavy manipulation, let's say there comes some favorable comments, okay, so, and there comes very heavy manipulation, and the S&P 500 breaches the 7801x, 7802x range, 7803x level. Okay, and moves up and goes all the way to the 7800 7x/8x zone. Okay, then it is like 100% it will fall, right? Because, and yes, when it will fall, then it will fall back to the 7800 3x, or and this the 2x. So this was the bull side. Now let's discuss the bearish side. Okay, so again, see, the same factors will work for the bearish side, but in a different manner. So when I say the different manner, okay, so again, we will emphasize on the 7800 and the 7707x level. Yes, but guys, before that, so far, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also guys, so far, if you have liked this video, then please hit like to appreciate, and also please hit the hype button on YouTube to support. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So when I say the bearish side, see, bearish side will become heavy if the S&P 500 opens above the 7800 or opens below the 7800 but moves up and hit the 7800, and then it comes down. Okay, so that will be considered as the rejection, and then there will be 3 rejections, 1, 2, and these 3. Then there will be these 3 rejections, and that this will be enough to break the 7707x level. This is the heavy support to the S&P 500, because once again, as long as the S&P 500 is holding, sustaining, and all hourly closings, 4 hourly closings, and daily closings are above the 7707x level, S&P 500 is not going bearish. It will not go bearish. It will remain heavily bullish. Doesn't matter how many rejections are there from the 7800. It doesn't matter. Okay. Only when there comes the continuous hourly closings below the 7707x level, the S&P 500 will lose the bullish momentum, and then there will be some fall. Remember, there will be some fall, not the heavy fall, but some fall. Question is that How far the S&P 500 can go down in this condition? It means when the S&P 500 has lost the 7707x level. Well, in that case, the S&P 500 will come down. Okay, and its immediate support that will be well below to the 7702x level. Okay, there is one level in between these two, but that will not work once the 7707x level is lost. Okay, in that case, S&P 500 will remain highly susceptible to come down to test the 7702x level. Okay, now 7702x, then there comes immediately the 7700 psychological mark. Okay, now this is the 7700 psychological mark. It is getting support of the moving average. This means that it is very heavy support in itself. Secondly, okay, when we look into this, the range from 7700 to the 7702x, and there are two moving averages in between these two. This means this entire range is or will work as the strong support to the S&P 500, and because of that, the S&P 500 will not just hold, but it will be in a condition to move up. Move up to what? Move up back towards the 7707x level. Okay, and for now the S&P 500 will remain in this condition. Okay, what condition? The S&P 500 will remain in a condition to trade in between the 7700 and the 7800. The 7000, both of these are the psychological marks. Okay, these are not the calculated levels, but these are the psychological marks. Okay, but because there is a strong support at the 7707x level, then comes the 7702x. When it falls to the 7702x and recovers back, then this will start to act as the strong resistance. In this manner, S&P 500 will then stuck. S&P 500 will then stuck in between the 7700 and the 7800 until and unless there comes a clear and continuous hourly closings and the daily closings either above the 7800 or below the 7700 psychological mark. Okay, now so we are discussing the bearish case here. If there comes, let's say the S&P 500 has lost the 7707x and it is now coming down to the 7700 psychological mark, fine. Okay, initially there will be heavy hesitation. S&P 500 will hesitate to lose the 7700. Okay, but then it will come down, and only when there comes continuous hourly closings below the 7700 psychological mark, okay, S&P 500 will enter into the bearish side. Entering into the bearish side does not mean that trend has changed or the technicals have changed. No, the trend has not changed, and technicals will change a little but not much. The short term and the long term trend will still remain bullish. Okay, but after losing the 7700, S&P 500 will be highly susceptible to come down to test the 7621. This is my level, and the 7620.90, this was the previous all-time high. And those who are thinking that 7600 it is just a coincidence, or I'm just using it now, then you can read my updates. Okay, that were there in the month of May. Okay, from the starting of May, I started to mention the 7621. Okay, any bullish movement will stop here, and then there will be the reversal, recourse. Okay, then some correction, and this is how it is going to work, and it worked like that. Okay, so anyways, once the 7700 is lost, then S&P 500 will set its course to the 7621. However, it will not stop here, and even before hitting the 7621, S&P 500 will hesitate. Okay, so now S&P 500, if the S&P 500 has lost the 7700 by Wednesday, in that case S&P 500 will come down to the 7621. Okay, there is a level at the 7606x. That level will tell us, okay, how soon it is going to come down to the 7621. Okay, but if it has come down to the 7621 by Thursday itself, okay, or in the first half of Friday, then there will be some chances that S&P 500 will then enter into the 7,500 range. Now, so where the S&P 500 is heading to when the S&P 500 enters into the 7,500 range? Well, S&P 500 is heading to the 7,505x/6x. This is the zone in the 7,500. Okay, as of now we are expecting S&P 500 to hold and to sustain here in the 7,500 range at the 7,505x/6x. Okay, this is going to provide the heavy support. Okay, but before the S&P 500 can move to this level, S&P 500 will have to clear these the heavy support levels. First of all, the 7,700, then the 7,600 6x level, then the 7,600 to 1, the previous all-time high, then the 7,600 psychological mark. Okay, this is why the 7,505x/6x, okay, it is in a so this means that overall there is a very strong support zone, you can say. So overall there is very strong support to the S&P 500 in this manner in the bearish side. Okay, but again the summary of all of this is back. Okay, it is back to the same point. Okay, what is that point? The point is the 7,800 to the 7,700. The S&P 500 will oscillate in between the 7,800 and the 7,700. Okay, 7,707x is the first and the key indicator, the most important indicator for the weakness, for the intra-week weakness. Okay, so I will not say that bearishness, I will say weakness. Okay, because the technicals are not going to change, short-term and long-term trend is not going to change. Okay, only the weakness. Losing 7,707x level means towards the 7,700. But at the same time, see, bearishness is allowed. Why it is allowed? Because this was the manipulated move. Okay, and other than that, there is an unfulfilled obligation. Okay, so there are many factors why the bearishness is allowed. But at the same time, the bullishness, okay, there will be struggle in the bull side when the S&P 500 try to move up. But on Monday, in my pre-market analysis and also in the first update, it will be very much clear, okay, whether the S&P 500 is going to trade in the bull side or will remain in this weak bullish condition and will trade towards the 7,700. And guys, I have given the link to my Patreon community in the description of the video and also in the comment section. So guys, if you have liked this video, then please hit like to appreciate, and also please hit the hype button on YouTube to show your support. And also guys, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.